let's move on to our final presentation today, which is coming from Orphan. This is a relatively newly created niche contract research organisation, which is a world leader in testing vaccines and antivirals through human challenge studies. It's been actively involved in the fight against COVID-19. We're fortunate today to have the founder, serial entrepreneur and executive chairman, Cathal Friel. Cathal, over to you.
Keith, thank you very much for the introduction, and thank you for everybody listening. And we've had a long afternoon. I'll try and keep it reasonably swift. Our disclaimer, as we all need to read from time to time. Look, I'm not going to dwell. We've a pretty tight management team. Our focus really is taking over smaller cap struggling in companies, putting them together, taking out the costs. Usually, being honest with you, we've taken over two, losing the CEO and COOs, the very expensive people, and replacing them by the long-serving, harder working employees who've been there a long time, and that's what we've done. I'll come a bit more to that. Key attributes, what have we got? Basically, we've only put it together. It was a roll-up concept last year. We IPO'd in June, and we now have, in less than a year, we've created a niche CRO. What's a CRO? That's a contract research organization, or some people also call them clinical research. Basically, we perform the research we test the drugs on behalf of the large pharma companies. We get paid regardless whether the drug's a success or failure. So we're consultants. We're growing, we expect to be profitable very soon. We have a high margin pharma services business, and the reason it's high margin, we're the market leader in an amazing niche. We are the market leader, we're the world leader in the testing of vaccines and antivirals, and that's an interesting space to be in the current world. We have a broad customer base, which includes global pharma companies, and basically every vaccine company in the world either currently is a customer or has been in the last couple of years. But really importantly, beyond vaccines, beyond COVID, we're building new revenue streams, which is very important because we don't want to be a one-trick pony. We're a substantial and growing pipeline. What's in the business? Being perfectly honest, we have two small businesses. Both were a mess. Both were losing millions. In the case of hVIVO, tens of millions. None of them are losing money today, and that's literally a year after Venn and 4 months after hVIVO. I'll explain how we do that in a minute. But the combination of the two of them, Venn provides pre-clinical service, that's before the drug goes into humans, and hVIVO is unique. It's Neil Wilford funded it. He put 113 million into it in the last 5 years, and we acquired it in January for 13. It has some fantastic assets. Of that 113 million he invested, a lot of it was wasted, but we did end up with a 24-bed quarantine clinic in East London. We ended up with a laboratory for 10 million, all replacement costs, and we ended up with a portfolio of 25 million pounds worth of challenge studies. These, we can't run our trials without them. But really importantly, if you look down at the screen in the bottom right-hand side, by the way, this presentation is up on our website, www.openorphan.com. Under investors, you'll find it there. We try and keep it up to date on a regular basis. But look at our Janssen, that's part of Johnson & Johnson, Boehringer Ingelheim, NIA, the American arm of the government, Gilead, Ipsen, even DARPA, the American Defense Research. So basically, anybody developing vaccines has been dealing with either Venn Life Sciences or hVIVO. We intend keeping these brand names, a family of companies. We don't believe in diminishing them. Our customers know hVIVO for 25, 30 years. It actually goes back, its history goes back to 1947. It was originally known as RetroScreen, and before that, the Salisbury Flu Clinic. So it's unique in the world. It's been testing vaccines going back to 1947, very successfully. A snapshot of what we have. Say we only IPO'd last year. We're probably one of the largest management team backed companies. I put over 2 million of my personal cash into it. And myself and the founders, we've over 20% of the company, and we're locked up for 3 years. So there's another 2 years to go before you'll see any of the founder team. Shares in issue. We have 640, market cap in recent days about 77 million. And very importantly, we have a lot of cash. We took over struggling companies. Our customers were frightened for years because they were so thinly balanced. So we raised money recently, primarily for two things: to bolster our balance sheet. When we're dealing with likes of Pfizer, the Johnson & Johnsons, and the Gileads, big monster companies. It's nice for them to look at us now and say, wow, you've got 15 or 16 million cash in the bank. Revenue last year was 24 million, and we would expect it to do better than that going forward. And on a longer term, we've huge plans over the next 18 months. You'll see we've a pipeline of vastly increased sales. We have offices in London, Paris, and Breda in the Netherlands. There was 5 or 6 other offices. We shut them all. We IPO'd at 5.7p. We raised some additional money to fund the hVivo acquisition in January, 6.1. And then being honest, that was a struggle in January. The world didn't really know or want to know that hVivo was a world leader in the testing of vaccines and antivirals. But funny enough, when we went to top up our funds at the end of May, we had one of the most oversubscribed fundraisers. We couldn't believe it. We went to raise 5 or 6, and it was many, multiple times oversubscribed. And we ended up getting purely institutional shareholders. We did make it open to our long-serving and long-following retail. We allocated $500,000 of that to primary bid. Unfortunately, we probably should have allocated more. There was a lot of people looking for shares, but we're trying to keep everybody happy. Other large shareholders, Invesco 7.9, and they've assured us they're with us for the ride. Reason our share price came off, it ran up to about 16 in the middle of our fundraise, which was unusual. But once it completed, it steadied off at 16p. We had to raise it at a bit of a discount because the morning of the roadshow we started on the Friday, our share price is 11p, and naturally large institutions will not come in. They'll have no truck with us, but the share price bouncing 25% in the middle of the road. So we ended up having to do it at a discount, 11p. But even the share price today, we're still a little bit ahead of where that placing was done. Why did the share price drop off from 15 to 12p in recent weeks? Well, the Woodford stakes. There was 15 or 16 companies had a Woodford stake. Their name was down here up to 3 weeks ago. They had a 6% stake, and they all got bought by an American company called Acacia. Acacia bought all 14. In some cases, they dumped all of the stake. In our case, they dumped 2/3 of it. They didn't allow us to bid. Our institutions wanted to buy it, and they took an option of selling it through Berenberg, a market maker in London. And up until recent days, Berenberg were still selling some of that stake. We'd hope that overhang will be gone pretty soon. As soon as it's gone, I think you'll see our share price correct pretty significantly. What have we done since the merger? We've promised a lot, and I think we've done a lot, and we've an awful lot more to do in the coming weeks and months. We said we'd put the two businesses together. This is the end of January. We'd expand hVivo laboratory services, and we'd convert the pipeline of contracts we get profitable. What have we done? We've completed all of the above. We've taken 2 million from the hVivo cost base since January, 3 million from the Venn cost base, and a further 2+ million going on 3 by Christmas 2020. We expect to be, we're more or less there now, profitable. We've right-sized the management team. I say I have a habit of these companies getting rid of the CEO because I myself on a salary of 140, and believe it or not, some of the other CEOs we had were in many multiples of that. I think it's crazy. I'm not going to bore you with, we've been announcing deals, we've been doing a lot, and all I would say here in regards to the 3.2 million one, the 7 million pivotal study is coming down the track very quickly. So that's a 6th of March, 3.2, and then at 7 million. We also announced a 3.5 million in the May, and that will be now is actually in the clinic and work in progress. What I would say in the coming weeks, we've a few more in the 3 to 4 million territory. I know people would like to see us announce one of these every week, every fortnight. Just bear in mind when we're signing off in 3 and 4 million deals, they do take a few weeks longer. They do take a little while. But all of these large multi-million deals we're doing, they're for delivery, the revenue for this year. They're not never into next year. Any of these deals, we'll have them completed, customer serviced, and money in the bank before Christmas. And we've launched our COVID testing. The COVID testing, there was a lot of excitement on it. There's a bit of confusion in the market about antibody testing, but what we've done now, we're doing both antibody testing and PCR testing. And what we're doing with our testing capability is building up a very strong business to business. We're approaching mid-size and large-size companies. We don't want a one-off big pop, do a lot of COVID testing, and then suddenly in 6 or 9 months, it all disappears. We're building long-term relationships, nice profitable testing where we'll do both antibody testing, COVID, that's the antigen testing, and as we come into this winter, we have an ability to do influenza testing. We have a laboratory in East London. It's one of the few full virology laboratories in the Greater London area. And so we intend that business to have a nice, sticky, steady business, not this mad big pop. So the antibody testing is shaping up really nicely, and there'll be more of that in the coming weeks and months. What is the big one, the story I want to tell everybody, a challenge study. A challenge study is a way you test vaccines by challenging the immune system. We basically have a 24-bed laboratory. We're the only people in the world who announced we're going to do a COVID-19 challenge study. That's a clinical trial. And we're off to the races. That could fundamentally and massively will transform our business. As of today, there's 179 COVID-19 vaccines developed around the world. There's only 20 in the clinic. That's 20 who are going into humans as we speak. And of that, over 12 of them are in active discussions with us. We're guided the market. Those studies are about 8 to 10 million each. And we believe in the coming months, not years, by autumn time, we'd be surprised if we haven't announced at least 6 or 8 of this. So do the sum simple. 6 times 8 is 48. 8 times 10 so this could be big numbers. And they're for delivery in the coming 6 to 12 months. So it's a very exciting space to be in. We took a large chance, but it's actually really exciting. We have virtually every vaccine company in the world wanting, could they test our vaccine facilities? So we have to pick and choose, carefully pick them, and make sure the ones that we get maximum return on our investment for shareholders. I'm not going to dwell on this for any who want to figure out that's how the challenge model works. Basically, we take 100 volunteers. They get paid 3,500 sterling. If they complete the trial, they come into our clinic. We vaccinate them a month before, and then we test them in our clinic. Does the vaccine work? By actually giving them a version of the disease. That could be influenza, RSV, asthma. In this case, we'll be giving them a version of, believe it or not, I know people think we're mad, but COVID-19 will be attenuated and there'll be reduced infection capability. So that's challenge study, page 9. And I'll take you now to page 10, which is our other services. So hVIVO laboratory services. The beauty about it, I keep emphasizing, our business now, we have a very fast growing, steady clinical research organization doing challenge studies. They're very profitable, they're a niche, and we're one of 2 companies in the world performs these clinical trials on vaccines. So that business is not dependent on COVID, but it's almost like an each way bet. We also have the COVID side, which is the COVID-19 challenge studies. We have a wonderful laboratory in the past, and we still need that laboratory for 10 to 15% of the time it's used to support our studies. Believe it or not, 80 to 90% of the time, no staff you're looking at in that laboratory do nothing. So we've now started laboratory services, and you noticed earlier this week, we announced 3 further deals. We announced 2 last month, and we're announcing lots in between. We're not even now getting around to bother to announce them, but that is a very sticky. We could get 7 or 8 million a year. It's about pure profit, those transactions. And the staff love it because it's interesting and exciting work. And most staff don't want to be twiddling their thumbs for 80% of the time. So that's the lab services business. Easily we're targeting 5 to 10 million annualized revenue, and we're well down the track in that. The quotient antibody, I think we covered that. It's going to be a nice steady. It's not going to be this big, massive, big pop and then pop down. So we want to build that steady, and we want to use all of that laboratory services testing capability, and we'll update you more in the coming weeks and months on that. The genomic database, it's absolutely, again, hVIVO, as some of the shareholders says, it was almost like a little gold mine that keeps on giving. Our genomic database is up and running, but more importantly, we're going to populate it extensively. hVIVO has the world's largest database and a lot of its genomic of infectious disease progression. They own the placebo side of all their clinical trials, and that's how an infectious disease passes through the body. This business has grown so nicely, we could almost spin it off to be a standalone business of its own. That's our genomic health business. You'll see in here plenty more of that in the coming weeks and months. This slide is very important. Why both businesses lost money, then and hVIVO. Simply, their break-even point was too high. They had far too many offices, too high a rent, and really importantly, too many high-paid staff and not enough revenue. If you know, we've lost CEOs, more than one, i.e. we let them go, not they didn't leave us. And then we brought down the break-even point. And more importantly, we're bumping up the revenue very significantly. I'd say in the coming weeks, we've got a few more large contracts we want to be announcing, and as and when they come, we will announce them. If people bear with us, you'll see them. And then as we get into the end of the summer, I think you'll see sensational updates as regards to COVID-19 challenge studies. We are the only party in the world helping companies to test it in the form of challenge study, which means instead of taking 2-3 years to test a vaccine, we can test any COVID-19 vaccine 2 to 3 months in our clinic. It does take 6 months to get it up and running. We only announced 2 months ago we're doing it, so we should be ready on or before Christmas to start those clinical trials. Current trading is pretty good. The traditional Venn business, now we're cracking the whip. We've been focused on the biometry, the data monitoring, and it fits into hVivo. So it's providing really, really well. We've got rid of all the loss-making aspects of it. So the two businesses, hVivo and Venn, now are fitting rather nicely together. Our pipeline, dark blue, is the non-COVID, and keep emphasizing, even COVID disappeared tomorrow, and no, we'd all hope it would just go away. We have a pipeline of over 100 million of prospects we're working through over the coming 12 or 18 months. The light blue at the bottom, that is the COVID-related work. And there you have a pipeline now of 60 million at least we're targeting in the coming year to 18 months. We had it light blue because it was blue sky. That blue sky is becoming much clearer, and the COVID work is materializing because at the very end, we are now rolling out. We are doing antibody testing and we're doing PCR testing. So that's happening. Third-party COVID laboratory services. 2 of the deals last week were COVID laboratory, or this week were COVID laboratory. So that's happening. And then the big one with 35 to 70 million here of COVID challenge study tests to test those vaccines. That is materializing. And I think, people are wondering, come on, Carl, announce more deals, do more deals. All they say, bear with us for a couple of months. Our company is utterly unrecognizable where it was since it was the end of January. In 4 months, judges in 4 months and crims. Watch what we do in the next 4 months. I think will be utterly transformed, all for the positive side. A big part of this, we took a huge risk the 9th of March. Some of the former management team gave me a lot of hard time saying we shouldn't do it. But we said we'd launch the world's first coronavirus challenge study model. It got picked up by over 200 media companies around the world. 185 TV stations, radio stations mentioned it. Publicity is great, but that caused a fabulous uplift in our pipeline of inquiries. So virtually every COVID-19 vaccine company, plus more importantly, the traditional vaccines. A lot of the work we're announcing at the moment and the deals in the next couple of weeks we'll announce are for traditional vaccine development. So despite lots of action into vaccine, there is also a huge amount of money. The world's waking up. They need to develop all these other vaccines that were ignored, particularly RSV, particularly influenza vaccines. There's lots of them. So it's a great space to be now the world leader in the testing of vaccines and antivirals. Say we're in touch with 12 of the leading vaccine developers. That's a pretty good boast to make. And watch that space. We'd hope to be announcing deals, not in the coming weeks, but on those in the coming months as they sign up. The media coverage resulted with 50,000 registered volunteers on our website, flucamp.com. That's where we corral and monitor and pull our volunteers together who want to engage in the trials. hVivo had very little publicity before February and March. Now RTL in Germany, Wall Street Journal, NBC News, BBC News, Sunday Times. So we've built a great presence. And again, vanity and sanity. The beauty of this is publicity has generated a lot of inquiries. So we're spending nothing to look for volunteers, and we're spending nothing to look for inbound queries. In conclusion,
we've got a massive number of questions. There's a very popular question session coming up, so that'd be brilliant if you can.
Okay, I'll wrap up literally in 2 minutes. So I'll skip the conclusion. I think I've summarized it. There's one last piece I want to take here. If you noticed, since January, our share price flatlined around 7p to the 7th of April, to the last of the original hVivo legacy shareholders sold. Once it stopped selling, it doubled and almost tripled. Now, in recent weeks, we've had the same thing. We've the last of the hVivo legacy shareholders, the Woodford stake, has been selling, and now we're flatlining around 11, 12p. We'd hope when that party, i.e. the KSA stake, stops selling, and we're nearly there, we'd expect a share price correction. Last piece, and this is very important, we've a bunch of non-core assets, i.e. vaccine assets. The company did raise 113. We bought it for 13. They're bundled in Prep Pharma. We have 62%. We own 100% of an influencer modular. But the real jewel in the crown is a 49% stake in Immutex. We've got together with a 51% shareholder, and we're running the dual process. We'd like to sell for cash. That would be the best way to do it. And that would be sent out as a dividend to all shareholders. A competitor is Thilmus in Vienna, got bought by Merck. It's a very similar company. It's based in Vienna, Austria. It was bought 5 weeks ago. Price wasn't disclosed. Merger market says between 100 and 500 million or 400 million. We believe is closer to the upper end. With dual strategy, we'll IPO it, reverse the NASDAQ vehicle at the same time, and whichever one crosses the line for us, say a pure trade sale for that Immutex. It's a universal flu vaccine. It's a universal mosquito. And the last piece, you'll see that on the first page of our appendix, you'll see it. We have a strategic plan underway, and that is going to be hopefully the first big cash back to our shareholders in the coming months. All of this presentation and lots more is on our website. So I think, Richard, you said there's some questions, so maybe I'll stop talking and allow some of the questions to come through, if that makes sense.
Right, I'll start asking you a few questions. I did lose my signal twice during your speech, so if I ask you something you've already answered, we'll just move on. So
sure.
Okay, so the first question is, have you any idea when Acacia might be out of the stock? And I suspect the answer might be no, but have you any thoughts?
We don't. We keep bidding them. I spoke to them last week. I rang him up. The gentleman's in New York, and he said he's all his selling done. We know he has a small amount left. It was rather unusual. The 14 stakes of all the Woodford, they give them to Berenberg, who just dumped them in the market, and Berenberg has refused to take bids. They just seem to determined to keep dripping them out. There has been a lot of stock traded, so he must be nearly gone, but he's not quite gone yet. But they should be pretty soon. That's all we're saying.
Could you reiterate your long-term objectives for the company in terms of building and selling, or building and building?
I said earlier in January, if we could get this company, get revenues of 30 million, and get 3 times revenue, get 80, 90 or 100 million would sell out. Before Acacia start dumping our shares, we had the 100 million market cap. So I don't think we're going to sell at that current market cap. What we'd like to do is, look, every company should be up for sale. Particularly this Immutex asset sitting there. So step 1, let's try and sell or monetize Immutex. And step 2, naturally, I believe this company could be worth a market cap of several hundred million within 12 months. Like another company I founded was Amrit Pharma. It listed in NASDAQ yesterday. I kept cracking the whip for the management team there saying, we're going to sell, we're going to sell. Amrit now has a market cap over 300 million. It's got 200 million in bonds. So when you pass 300 or 400 million market cap and have substantial daily liquidity, the urgency to sell goes out because now, so my plan would be absolutely, the exit is still there. The exit point has just got substantially larger. And I think if we deliver half that we feel we'll deliver in the next 4 months, the exit multiple should be substantially bigger than anything we expected from before.
Can we just spend a couple of minutes on COVID-19? Is AstraZeneca engaged in your challenge study model?
Unfortunately, we're precluded from talking about anybody, but I'd say bear with us till early September, and a lot more might be revealed then, and people might be very pleasantly surprised to who and what is in it. But the best way to look at it is that some of the big pharma companies won't bother with a challenge study. They're rushing out to try and do a phase 3. Most of them are talking to see how quick can we do a challenge study. So that's where we are. So I think we'll have, at the moment, we've way more orders potentially than we could ever supply. So we've been picky and choosy. We're trying to get between 8 and 10 million per study. And if we get 8 or 10 of them in the next 12 months, we'd be very happy.
So if I can make it a more general question, what are the key characteristics of your business that attract the larger pharma companies?
The key characteristic would be we're the only party in the world. There's two companies does challenge studies, ourselves and SGS. They're based in Switzerland. They're a $20 billion Swiss company. Basically, one of our former employees, Adrian Wildfire, left 5 years ago, went to SGS and created a competitor overnight. They did give us a hard time. It's good news is Adrian's back. We hired him back. So, and the part of the reason that he and the team is coming back is SGS, being a 20 billion company, really doesn't want to be messing around with COVID-19. Look, it's risky what we're doing, but It's exciting. We can help humanity. We can advance COVID-19 vaccines by years to the market, bring them forward quickly. And more importantly, if we're getting 10 million per study and we do 8 or 10 of them, it's going to be hugely profitable for them. So it's nice to be doing something really good, but also very profitable. So we have no competitors for what we're doing, which is rather unusual.
Okay, I'm going to ask you a slightly more detailed question. Could you outline the milestones required to develop a COVID-19 challenge model and provide an update on what stage you're at and a projected completion date? And given this challenge model is a prerequisite for significant sales revenue, could you outline any risks preventing completion? So it's more detail.
Yeah, look, very simple. A challenge model is you've got to get a version of the virus working that you can control and apply. So that's called getting the characterization study. We're underway. We've got to get MHRA approval. We've got to get ethics approval. And then we've got to make sure it's safe. So all we can say is that, and on average, it takes 2 years to do this. We're trying to do it in 6 months. We started it formally 6-8 weeks ago. So it takes 6-8 weeks ago and add another 4 months. However, the beauty of what we're doing, we can get a very large upfront. All our challenge studies, we get 20-30% in cash. So once we're ready to take orders, we'll be announcing them, and they'll be quite large upfront. Some of the upfront cash amounts will be substantially bigger than deals we ever signed before. So the plan would be those trials will be starting around the year end, but they happen to go quite quickly, 1 month, and we can run a number of them together at the same time.
Okay, so we move away from that and on to another topic. So Immutex.
Yeah.
What's happening? Is the research team intact? Is it dormant? Is it waiting sale? Is it waiting to go on a NASDAQ listing? What's happening?
Okay.
And there's several questions of that sort around that particular topic.
Okay, Richard, I think page 20 that's still up on our screen there, hopefully, covers that. We're monetizing the non-core vaccine product portfolio, mainly Immutex. We're seeing strategic plans underway, and subject to agreement with the SEEK Group, it'll allow a sale for cash. And that has to, look, beauty is, it's got some cash. We're spending no more money in it. The time, if we can sell a vaccine, a universal influenza vaccine company and a universal mosquito vaccine company, I would have an Irish saying, if you can't do that, you couldn't sell life belts in the sinking ship. So I think, I'm not saying it's a sinking, I'm just saying that it won't be that hard to monetize Immutex. Some of these companies, I'm still blown away about how much we can do in 4 months. And sometimes previous management teams did less in years. But yeah, Immutex is definitely top priority as we speak. And as part of that, we will dual strategy. You can't go around saying you're for sale, and you might frighten off buyers. So you have to have a plan B. And the plan B is we're also looking at reversing into a NASDAQ listed SPAC as a special purpose vehicle with cash. Because we think that could get a very high valuation. So we'll run the dual strategy over the next couple of months. As we get into the autumn, whichever one is the highest, best price for shareholders. If it gets IPO'd via the SPAC, we'll do a dividend species to all open orphan shareholders, myself included. So that means later this year, open orphan shareholders will hold a share in open orphan and equally a share in the Immutex listed vehicle. But ultimately, a nice simple trade sale, cash in the bank, which we dividend out to everybody, would be the simplest route.
There's a lot of questions on Prep Bio as well, but did I miss that when I was trying to reconnect? Did you talk about it?
Yeah, I didn't say too much. Prep Bio, we own 62%. Likewise, if we're doing the SPAC, we'll roll that in, or we might have an option of putting that into another separate vehicle as well.
And you might have covered this already, but your acquisition policy at the moment is
done. Done.
You're not doing any more for the time.
No, we acquired 2 companies. Then, being straight, was reasonably hard work. hVivo was the best deal I'll ever do. I'm 56. I started working at 16. This is well over my this is my 40th year working, but this is absolutely acquiring hVivo has to be the luckiest deal of my life. It just keeps on giving. The amount, well, no, mind you, the previous shareholders did invest 113 million sterling in the business the previous 5 years. We bought it for 13. It came with 2 million cash. So look, but it keeps on giving. We have to be careful. We just want to steadily now start monetizing parts of it, growing the share price, making sure it's profitable, and making sure it remains the world leader in the vaccine trials and testing.
Okay, well, I've summarised as best I can most of the questions, and we are actually right on the nail for time. So thank you very much indeed. It's been tremendous talking to you. I'm just going to hand it back to Keith.